Hello, entrepreneurs. Joe DeCharis, CPA, pulling my suspenders off. Uh, Coming to you live from downtown Bethpage, Long Island, New York, for another amazing episode of How to Win at Business and how to win at your taxes. I mean, this is amazing. It's February 1st, 2022, and never in my life did I think I would be approaching my accounting and tax business the way I am now. But the truth is, folks, that we're in a battle. It's like a silent war, and the IRS is getting their troops ready. It's like it's like Russia putting their troops on the border of the Ukraine. You know, they have 100,000 troops on the border. You know, there's always something going on in the world, and that's what's going on right now. Hopefully, if you're watching this at some other time, it's not happening. But just like Russia putting troops on the border of the Ukraine, the IRS is in the process of hiring up to 85,000 IRS agents whose sole responsibility is to be collecting unpaid taxes from who? Not from rich people, not from big corporations, because they're all over them already. They're already all over them. They can't be, more over them. I mean, it's like trying to squeeze water from or blood from a stone, whatever the term is, but you get the idea. No, they're going to be coming after small people, the people that can least afford it, the people that can't defend themselves, small business owners. And some of them, I could see need to be gotten. People that open corporations and never file returns, people that notoriously were working in cash businesses. Well, guess what? There's not too much cash around anymore, and now the IRS is keen to it. They're basically telling the banks that if somebody is depositing cash, believe it or not, they're supposed to ask, where did you get this cash from? So, the times of under the table are quickly diminishing. Everything's going digital, which means everything's going to be machine driven. And this just didn't happen overnight, folks. This has been planned for decades and decades. I can go as far back as when I started in accounting, which was 40 years ago, and it was going on even before that. Issues like this independent contractor versus employee issue, it was always an issue. And if you're not familiar with it, what it is when you're an employer, it costs a lot of money to have an employee. You got to pay your share of payroll taxes. You got to pay workers' comp insurance, disability insurance. You have all kinds of compliance issues with uh, collecting taxes, reporting wages, not only to the federal government, but to the state and a lot of times local governments. Everybody wants their cut of the pie. Well, it was a lot easier for business owners to treat people as independent contractors. And now what that meant was they weren't employees. They weren't treated as employees, which put them in a whole different legal category, a whole different reporting and compliance category. It was very convenient for the employer. And guess what? The employee had no taxes taken out, which was good for them, allegedly, and also bad for them. If they reported their income, and a lot of them didn't, and that's who the IRS is going after, a lot of them didn't. But if they did report their income, let's say they were making $1,000 a week, 52,000 a year, and now they have no taxes taken out. Well, and let's just assume they have no business deduction so that we don't complicate this. Well, 52,000 net profit, that now they got to shell out 15%, almost $8,000 in Social Security taxes that weren't taken out. So 52 minus 8, you're down to 44. Now you got to pay income taxes, which also were not withheld. Now, some people that were smart paid quarterly estimated tax, but those were few and far between. Okay, to even know that you had to do that and to properly do it, that you needed an accountant. Not many people were able to do that on their own. Yeah, there were, some, but those were few and far between as well. So, when push comes to shove, a small business trying to make ends meet, and we're talking about small businesses, not big corporations that are doing even hundreds or millions of dollars a year. These are people, making less than 100K a year. So, yeah, when they say, oh, if I get a choice, I can run a payroll and pay the payroll company, let's say $50 a month, and then I got to take out the taxes, and then I also, the employer, you figure, I would tell if an employer, if a client was in a non-hazardous profession, like let's say they were a consultant or they had an office where the workers comp wasn't that expensive, I would say you got to add at least 10% to everybody's pay as as an expense. So if you're paying somebody $1,000 a week, well, it's costing you 1,100. So now you have the business owner that is weighing, well, what do I do? Are they an employee? Well, guess what? They would rather have them be an independent contractor. And years past, let's say 10 years and beyond, it was very difficult for the IRS to police the issuing of 1099s because the rule was if you paid an independent contractor $600 or more, you had to issue them a 1099. Okay, well, because it was very hard to enforce, uh, I would say a majority of small business owners never bothered. Now, I know this because I would tell my clients, we got to do a 1099, and very few of them listened to me. And there were no repercussions, there was no blowback, unless there was, and in very few cases, maybe there was a Department of Labor audit. I've had clients that were in the construction business. So in New York State, they are under the microscope more now than ever. So I've had clients that not the IRS, the Department of Labor would come in and say, hey, these people are subject. They wouldn't say, oh, they're employees expecting the business owner to go and file W-2s, because that's what happens if the IRS comes in. So I'm going to go quickly over that. But what the state wants is they want the unemployment insurance. Okay. So that's another expense. And if you don't know what unemployment insurance is, the employer pays that. It's a totally employer driven expense, and they pay up to a certain dollar amount for each employee. And again, it depends on your rating. If you have low turnover, you pay a low rate. If you have high turnover, you pay a high rate. So that 10%, that's if they're in a low uh, unemployment rate and a low, not a hazardous industry. So you get my point. It costs a lot of money to run a payroll. Well, I'd say about maybe 8 or 10 years ago, the IRS started with these two little questions on business returns. They're on sole proprietor returns and corporate and partnership returns, and they seem innocent, but they're not. The question is, are you required, or were you required during the last taxable year to file Form 1099, to file Forms 1099? Now, if you said no and you were required, well, guess what? You just lied on a return. You just lied on your tax return, which that in itself isn't going to put anybody in jail, but it is going to raise an auditor's eyebrow and say, well, what else did you lie about? Uh, Now, if you said yes, The next question, so the first question is, are you required? The next question is, well, did you file? Well, if you said, yes, I'm required, and no, I didn't file, well, guess what? Red flag. So, what the IRS is looking for, what they want is yes and yes. Yes, I was required, and yes, I filed. Because most businesses, myself included, hire independent contractors. It's just, especially in today's environment, it's easier to hire somebody as a let's say subcontractor. That's what they are. I'm going to hire my web designer. They're a subcontractor. Even a lawyer, an accountant. Those are not employees. Those are independent contractors. Well, lo and behold, last year the IRS came up with a new 1099. It's called the 1099